The good, the bad, and the ugly. It is time. Joining me now, Phil Flynn in the trading pits of the CME. Robert Gray up in the newsroom for me. On set for the entire hour, Jim Frischling, NewOak Capital president. All right, Phil Flynn, I'm going to start with you. You've got the good. Libya's returning to the world oil market.
You bet it's good, Cheryl. In fact, this is the biggest post-war oil comeback probably in history, and it's defying expectations. If you listen to all the experts, the Department of Energy, they were all saying that this may take years for them to get back to normal pre-war production. Now, right now, the Libyan National Oil Company is saying, guess what, guys? We might be back to full production by the end of 2012. Nobody thought that except I'm going to hurt myself. I'm going to hurt myself, patting myself on the back. We said that on this program. They would beat expectations, and that's really the good part of this story. Back to you.
All right, Phil, stay with me. Don't go anywhere. Robert Gray up in the newsroom. You've got the bad jobless claims out today. Better than expectations, but it looks like we're not even close where we need to be.
No, we're not. We are on the right path perhaps here, Cheryl, but yeah, it's still far from where we need to be for a healthy economy. You know, bad, yes, it is bad. We'll start with the good part of the bad, if you will. Much lower than expected, 381,000. We're going all the way back to September of 2008. Since we've seen them this low, we have to wait and see whether or not it's a tease or the real deal, Cheryl. The fourth week, the moving average, though, has been moving lower, down 9 out of 11. Below the historical weekly average of the past decade. But, and here's where the but comes in for the bad. We know that a lot of these are seasonal jobs for retail for the holidays. We know that last month 315,000 people gave up looking for work, which helped bring down the unemployment rate, the wrong way to get there. And then we know that government jobs and the military continue downsizing, particularly after the debt committee, a super committee, did not come to any agreement. So that trend is definitely going to continue there. So we do know there are some, we need to be down around 300,000, many economists say, for a very healthy, robust economy that's growing where we need to be.
Yeah, you're right. We're so far off of that. All right, Jim, now to you with the ugly. You say it's time to lighten up our positions in gold. Why do you say that?
Well, to be clear, I'm not saying you should dump your positions, but I am betting on an EU solution. I know there's tough talk today. I know there's a lot of focus on it, but in betting on an EU solution, I'm expecting a risk trade on, particularly for the first quarter. So I think gold contracts, even silver contracts, are looking a little bit lighter in pricing for the first quarter. I think more investors are going to look to deploy money in stocks starting in the first quarter, and as a result, I think it is time to lighten up on gold. I don't think we break through the support levels of 14 to 1500, but I would be booking profits here and again preparing. Look what happened to Ford today. There's a good time to be looking at stocks.
All right, Jim, we're going to have more with you, and we're going to talk with you about Europe coming up a little bit later on in the show. All right. Well, we are looking at financials right now. Ask yourself this: is it time to buy U.S. financials? Jim Frischling, you say we should be buying the banks right now. Why do you like them?
Well, first of all, I fully admit that the financials have been a disaster in 2011. I mean, B of A off over 60%, JP off over 30, Citi on nearly 50, and even Wells Fargo, which has a far stronger balance sheet, off over 20%. So these guys are trading now at historic lows with single-digit PE. So why do I like them? It's not just because they're beaten up. I'm subscribing to a financial system that requires 4 pillars, and I think those 4 banks need to be not only solvent, but need to be functioning properly. So at this point, while you need a strong stomach, I would put money to work in B of A. I would turn off the screens, and I'm telling you, in a few years, you're going to be very satisfied that you've done that. In the near term, if there's any good news there, that stock, which has been so beaten up, really trading a near to worst, I think could actually pop significantly. But again, to me, it's a put money to work, and you'll be happy down the road you did.
Interesting that you talk about the timing of buying stocks like these. So it's got to be, you say, strong stomach, but in for the long term. What does that mean to me? Is that 6 months? Is that a year? What is it?
Again, the timing really is very difficult here, but I'm actually going to go longer than the year. I think we are in a deleveraging process. There is slow growth, but the fact remains is these companies, these banks are just so important to the system. Now, if we go over across the pond and we go to Europe, I have to confess that I can't be as excited about some of the European banks. While I do think there is a solution, and I do think, for the most part, they'll weather the storm, I think the risk at this point is warranted, not so much because of Greece, but what could happen in Spain and in Italy.
You're still watching Europe. We're going to talk about that at the end of the show with you, Jim. Thank you very much. You're going to be staying with me. And here in this country, obviously, we are monitoring every single comment that we get out of Europe. And, Jim, you say that still Europe is the most important factor. I do want to get your reaction here to what we're hearing from Angela Merkel, saying that the euro has lost credibility. We win that back, but the fact that she would actually say that they have lost credibility is really a strike against her own country. Germany, which is the strongest financial backstop that we have in Europe anymore, at this point anyway.
Well, specifically to the issues of Germany, they're going to have to really they're going to have to see the whites of their eyes in order for Merkel to get this done. So I'm not so sure I'm not so sure she's not playing this just right. My thoughts on the Europe today, I should say, is, and I think I'm a little alone on this one, because I think everyone's talking about that the EU didn't use its bazooka. So I'm going to assume a bazooka must be defined then as quantitative easing and ECB bond buying. But the fact is, I think the ECB did an awful lot. They cut the quarter point, which was somewhat expected, but they also took some less orthodox measures, such as a refinancing with a fixed rate and a 36-month maturity. They also are allowing single A collateral, asset-backed securities, to be posted as collateral to the ECB. And even more interesting, they're going to let the national central banks accept bank loans as collateral. So I do think these are some unorthodox measures telling me they really are putting some of their tools behind it. They just haven't done everything yet. But the market's disappointed that bond buying, wasn't part of it, and I think that was not the right expectation.
But Jim, and all of that is well and good, and your point is that we are making progress, and it seems to be that progress is being made. Ashley Webster reporting that just now. At the same time, the big issue still seems to be austerity measures, and will they actually? These countries still, at the end of the day, at the base of all of this chaos, still have to come in and get basically the books in order. I mean, that's a simplistic way to phrase it, but that is the crux of the issue. They've got to stop spending, deal with pensions. I'm not so sure that they've got it.
It's a great point. Budgetary discipline, fiscal discipline. Look, this is very different than what we just went through in the States, where, one country and we could pull it all together. This is 17 countries. So the fact is, there's an issue of sovereignty here. For countries to adhere to ultimately what Germany is going to be demanding in order to basically be the lion's share of this funding, sovereignty might be threatened. So I do think this is very sensitive. I also disagree. I don't think it's a 2-day issue. I don't think this gets solved in 2 days. I think there's about a 2-3 month window before sovereign yields in terms of Spain and Italy become unsustainable. So I wish it were solved in 2 days. I think there's going to be a lot of rhetoric, and then we're going to roll into the first quarter.
You have been very bullish on emerging markets. There have been a few hiccups in the road. Oh, I missed that. That face wasn't on camera. I wish it was. It kind of smirked. Oh, well. Look, are you still bullish on emerging markets? Because we've had some issues.
Yeah, I'll own that, and I agree with you. I think I, to a certain extent, somewhat underestimated just how much the developed nations absolutely can, let's say, hinder what's going on in the EM. So I still like what's going on in Brazil. I still believe there's good things going on there. But the fact is, I will certainly say that until some of the developed nations is a little more clear, there are other opportunities to deploy capital. So again, I'm not bailing on it. I think they're cheap. But the fact is, I understand that it's been a very volatile and difficult time for
maybe be more a little sector-specific, country-specific, I should say, here with regards to emerging markets. And that's kind of a theme that we've heard from a lot of our guests. Okay. All right. No, I still like emerging markets, too. I'm with you. All right, Jim's going to come back in just a little bit with more picks and some stock picks.